And now it's time for our weekly energy update with Dan McTeague, president of Canadians for Affordable Energy. Take it away, Dan.
Thank you very much for that, Nima. And of course, we are now mid-month, month of September. Things are getting back to normal. Normally at this time, we do this, we discussed last week, from summer gasoline. Hasn't quite happened yet. So I'm anticipating right off the top that we should be seeing a bit of relief in terms of prices in the context of ever increasing energy, gasoline and diesel prices. I'm going to unpack that a little bit for you, Nima, but the point is that we did see those small increases this week. In the Maritimes, we saw some pretty significant increases, and it's looking like, starting with Atlantic Canada, you're paying over $1.90 for a liter of gasoline, in many cases $1.94. That's really a reflection of the two carbon taxes, and of course, much higher prices being passed on with the higher HST at 13%. So a bad situation is certainly looking a little worse for Atlantic Canada, even as they brace for Tropical Storm Lee, which could make life a little bit more hectic. Diesel, too, is starting to make its felt. Not in terms of the spike we saw last year when it was $4.20, $4.30 a gallon on markets. Right now, of course, we're looking at prices that are a lot closer to $3.50 a gallon. But nevertheless, these prices are going to be here, as high and longer, rather than the spike and then coming back down. That's because there is a significant shortage of diesel supplies. And although refineries are working hard to rebuild those, at this time of year, it may be too little too late. And so we're going to continue to see upward pressure on diesel, not just across Atlantic Canada, where it's about $2.10 a liter right now, but right across the country. And that, of course, is a story that we've seen in Quebec and Ontario, where diesel prices are now pushing towards $1.90 and $2 in Quebec. In the West, a lot closer to $1.75 to $1.80, even in Alberta, where prices for diesel tend to be a little less as a result of no tax at the provincial side. And of course, in British Columbia, where diesel is now back towards $2 a liter. Again, Atlantic Canada is the lead on diesel when it comes to these prices, and it's likely to be a symptom of other problems to happen. We're looking at two refineries in eastern United States and Canada that are closed down, at least starting this Friday, September the 15th. And those will close down for about a month's period of time for maintenance. That means that, of course, there will be continued pressure on any increase in demand will crimp the supply that's there. And that could mean that next week, even though we see these switchovers from summer to winter gasoline, we may not get that big a break as we expect. So here's how it's looking. If I'm in Vancouver and it's 203, 204 right now, look for that to increase probably an average of 2 cents a liter. But at some point later in the week, it may actually drop to $1.99. But it will come back a little higher than what it is today on average, about 2 cents higher. Same for the rest of British Columbia. For Alberta, we've seen an increase from the $1.40 to the $1.46 range. Look for that price to remain, but could be pushed down a little bit by this switchover on blends, on regulation of the type of specification of gasoline sold this time of year. Saskatchewan doesn't want to budge. By the way, Saskatoon, 155.9. It's funny because gas stations there are losing about 5 cents on every liter of gasoline. It's costing them $1.60 to buy their fuel. Taxes in, they're selling for $1.55. So you got to imagine it's not a very good scenario for them there. But I digress. Winnipeg continuing to remain in the $1.63, $1.65 range, possibly up 2 cents a liter net by the end of the week. Ontario, 173.9. We're likely to see by Friday those going down to 171. And of course, that could go back up to about $1.72 at some point between now and next week. But in the meantime, we might see a 4 cent decrease as a result of that switch over from the blends of summer to winter gasoline. Same for Quebec. It follows the exact same market, and the Maritimes as well. The big story here is what success has come by OPEC deciding to cut back on its production of oil. It's a deliberate policy, and it is a deliberate reflection to the deliberate policy around the world of cutting back ESG mandates, divestment from oil and gas. OPEC is basically saying, if North America and the West and Europe, you want to divest from oil and gas and fossil fuels, no problem. We have other customers in China, in India, and we'll go after them rather than supplying you. So what's left is a shortage and a much higher price that we're seeing now for WTI at $90 plus a barrel, with, of course, Brent at about $92, $93 a barrel. I think there's still some room for that to go. Some are suggesting $100 a barrel within a month. I'll believe that when I see it, but it's not unlikely that we're going to see that in the next day or two, but we'll certainly see it in the next couple of weeks. That's it this week, Nima. We'll talk next week.
Thanks, Dan. Again, that was Dan McTeague from Canadians for Affordable Energy. Stay tuned. We'll be back.